The power of money making money is wonderful. In just a matter of 13 days, this account has grown to $874 in profit. And this HSA account, from a different person, it has been invested for 2 years now. It has grown 39%, a total of $5,628. Imagine you have HSA account between now, let's say you're 30, up until 65. You have 35 years of growth. The power of compound interest will do wonders by the time you reach that age. But as always, with any stock market, you're going to have your ups and you're going to have your down. But what matters is just stay the course. What matters is just stay invested, and through the ups and downs, and over time, you will enjoy the benefit of what the equity market provide. HSA, a health saving plan, is more than just a high deductible premium. It is a triple tax advantage. Your contribution is tax-free, the growth is tax-free, and any medical expenses is tax-free. Better yet, if you have enough fund that lasts you up to 65 and beyond, you can withdraw that fund for any purpose outside of medical. You just have to pay ordinary income tax on your withdrawal or your distribution. In order to have the fund to grow beyond your immediate need, you need to have it grow in the stock market by investing the contributed fund into their investment suite. The health saving account that I'm showing is health equity, but if you have different provider, their look and feel may be different, but the main concept are transferable to different providers. When you do a payroll deduction that contribute weekly into your HSA account, all it does is save that money for you in that bucket so you can use that cash to pay for your medical expenses. But if you want to grow that cash, if you want to grow that reserve, you need to take additional step by setting up your investment suite. That allows you to take that portion of contribution and invest it to different funds that are available within your plan. If your company changes the provider from the previous year to this year, then what you also need to do is start your investment sweep again, and select different funds again, because otherwise the lump sum that was from the previous provider to your current provider, it just simply sit in the cash portion of HSA, not the investment portion of HSA. So the example I'm showing you here is that scenario where it was in a different provider, but when the company switches over, all that money sat in the HSA bucket where it's readily available and not invested. To keep the video fairly short, I'm only covering the HSA investment portion of it. All other things that pertaining to HSA, I will not discuss it on this video. When I go over different funds that are available in this HSA account, I will not explain what each of the financial terminologies mean. If you have any question, I have a playlist that show you how to become a 401k millionaire that is designed for beginner. As I'm making fund selection and different asset allocation target, please do not simply copy exactly per this example, because you may have different risk tolerance, you may have different financial circumstance and different needs. So you cannot just simply copy and paste. Take the time to look at what different funds offer, what different fund provides, and the different growth. And you will see that there are funds that perform slightly better, but it wasn't chosen. It was chosen somewhat in the middle. I always say this in terms of funds. All these funds are not for everyone, but some of these funds are for someone. And that is based on different personal circumstance. Before I start, I want to caution you, HSA is not for everyone, but it is for someone. If you are healthy, you don't have any prescription, you don't have any medical condition, and you have enough money saved up in case there are emergencies, you can cover the high deductible expenses out of your pocket before your insurance company kicks in. However, if you are unhealthy, you have regular prescription drugs, and you have medical conditions that cause you to have high medical expenses, and you don't have money to cover high deductibles then it is not a good plan for you. Without further ado, let's get into it. Once you're logged in, click on Start Investing Now. This HSA plan has investor guidance with an advisory fee of 0.05%, or you can invest on your own without advisory fee, but you still have to pay the fees that pertain to the investment funds. If you are an experienced investor, you can select Charles Schwab brokerage account, which allows you to buy individual stocks and other ETFs. But with this account, we proceeded with the basic beginner one because it has plenty of good mutual funds to select from without having to worry about all the complexities that come with individual stocks and risk. For the HSA minimum cash balance, you can either select the $3,200 that is suggested by the IRS requirement, or minimum required by your employer and provider, or you can select the custom amount that is suitable for your situation. For the minimum cash balance, you want to set it so that it covers your anticipated medical expense for that year. If you set it too low, then you may be forced to sell your investment portion when the market is down, which you don't want to do. But if you plan to cover all your medical expenses using your cash outside of HSA and reimburse yourself years later, even decades later, then just set the minimum cash balance to the lowest allowed by your employer and the plan. Just make sure you digitally scan the receipt and save it and duplicate it so you don't lose it when you go out to reimburse yourself years and decades later. For this account, they plan to cover the medical expenses same year as they occur, and they plan to use HSA to cover it. So they're comfortable with $5,000 minimum cash. They have different target date funds depending on the year you plan to retire. Target date fund targeting 2030 all the way to 2045, 2051, 2060. They have mid-cap, large cap, even real estate funds, and the list goes on. And which one you select depends on your risk profile and the fund performance and fees and risk factors. To see the fund's performance, you can click on the ticker symbol. It will give you expense ratio as well as the past performances, 1 year, 3 years, 5 years, 10 years, and life of the fund. Click on the View Fund Research to get more detailed breakdown of the past performances, as well as the inception date, the past managers of the fund, the sectors the fund invested in, and the top 10 holdings of the fund. It also provides a rating summary, what market cap the fund has exposure to, whether it's a small cap, mid cap, or large cap, as well as the credit rating for the fund, whether it's low, mid, or high. VIIIX has an expense ratio of 0.02%, with a very decent return over the last 10 years, as well as the life of the fund. Take the time to read this fund performance over the years. You want to look at the fund strategy. In this case, it tracks the performance of the S&P 500 index. What it means is this fund has top 500 US companies in this one basket. That is as safe as it can get. 60% will be targeted, allocated to VIIIX. Next up is VSMAX with a 0.05% expense ratio and a very decent 1 year, 3 year, 5 year, 10 years, and life of the fund. This fund tracked the small cap index. 10% will be allocated to the VSMAX. Next up is VIGIX, which is a large growth fund. It is a passively managed fund with only 0.04%, with another decent, great returns over 1 year, 3 year, 5 years, 10 years, and life of the fund. Anytime you have a return between 8 and 10%, it's a wonderful return. Of course, higher is also better, but you also have to factor in risk. There's always going to be benefit and risk factor. This fund tracks large cap growth stocks with 56.85% concentrated with these top 10 companies. 20% is allocated, targeted for this large cap growth fund. The last fund is VIMAX, which is a Vanguard mid cap fund. It is a passive fund with 0.05% expense ratio. Again, another great return over the last 10 years and life of the fund. You notice I skipped all the details on how to read the fund's performance because all of that are covered in my 401k Millionaire series. So if you are unfamiliar with any of the terms, please look at that playlist. The remaining 10% is allocated toward VIMAX. It is worth mentioning VTSAX, Vanguard Total Stock Market, is also available in this HSA account. And what that fund basically contains all of US companies, large cap, mid cap, and small cap. If there is only one fund that you can select from, this is the fund to get because you have exposure to all the funds, all the US companies from large cap, mid cap to small cap. To recap, this account has exposure to 60% of S&P 500 index, 10% to small cap, 20% to large cap growth fund, and 10% to mid cap companies. A well-rounded portfolio having exposure to different baskets of funds. This account is meant to be on autopilot, so automatic rebalancing will be set to every 12 months. Every 12 months, the account will automatically rebalance the portfolio to get the percentage back to the original percent allocation, which makes the fund balance again. You can also change the view from expense ratio to the fund's performance. As you can see here, it lists the fund as well as the historical performances instead of the expense ratio. Everything looks good. 100% of the fund is allocated to 4 different funds. Save and continue to proceed. After you read the terms and condition, click on the checkbox to agree to the terms. Save and continue. To make this account on autopilot, click on Enable Auto Investing. This way, once the HSA cash balance exceeds $50, it will automatically make purchase based on your asset allocation that you set. With the asset allocation set for the 4 funds that were selected, now it's time to tell the system to make the purchase. This first time setup, it will be a lump sum purchase, so all $18,958.79 will be used to purchase the funds that were selected. Double check the dollar amount, make sure it's correct. Review by. Everything looks good here with the 4 different funds. Click Submit Trades. In Cash Replenish, it keeps $5,000 in the account, and anything above $5,000, it will invest once it exceeds $50. It is also set to auto rebalance on a yearly basis. Available to invest says 0 right now because $18,900 and change is pending trade once the business closed for the day. Click here to see the pending trades. That's it. You can sign out from here. The account balance, $5,000 available to spend. Anything for medical, dental, vision related. And then $19,823.97 are invested. The same view can be shown here. $5,000 available to spend in HSA account, and $19,823.97 are in investments. And recent transaction, it showed the purchase it made. $11,375 went into VIIX. That's the S&P 500 index fund. $3,791 went into VIGIX. That was the growth fund, the large cap growth fund. This one here is $1,895 went into VSMAX, which is a small cap fund. $1,895 went into VIMAX, which is a mid cap fund. The percentage breakdown was 60% went into the S&P 500 index, 20% went into growth, 10% into a small cap fund, and 10% into mid cap fund. Let's take a look at the investment. Not too bad here. Current investment balance is $19,832.97. In a matter of 13 days, the return over that period is 4.61%. That's the equivalent of $874. I keep talking about this all the time. This is the power of money making money. The investment contains the Vanguard Growth Index Institutional. 20% is allocated to that. 60% goes into Vanguard Institutional Index. This is S&P 500. top 500 companies. 10% is allocated, targeted for mid-cap fund. 10% is allocated, target for small cap fund. And so far, it's pretty balanced. The portfolio performance shows the portfolio performance as well as individual fund performance. All four of them are doing pretty good, neck to neck in terms of percent return. For whatever reason, if you want to change the asset allocation percentage, you can do it on this screen. No changes needed. For future reference, under the trade screen, you can use this to buy if you have cash available to invest. You can use this to sell so that you have cash proceeds to fund your HSA cash account. Or you can use it to trade, buy, or sell different funds if you so choose. As you can see, the power of money making money is wonderful. In just a matter of 13 days, this account has grown to $874 in profit. But as always, with any stock market, you're going to have your ups and you can have your down. But what matters is just stay the course. What matters is just stay invested, and through the ups and downs and over time, you will enjoy the benefit of what the equity market provide. And this HSA account, from a different person, it has been invested for 2 years now. It has grown 39%, a total of $5,628. Imagine you have HSA account between now, let's say you're 30, up until 65. You have 35 years of growth. The power of compound interest will do wonders by the time you reach that age.